Good afternoon, all. CamelbackTrading.org coming to you this Tuesday afternoon, October 11th. We are looking at Window Traders market profile of the ES and the SPY. Well, the day worked out pretty much like we thought it would until late in the day. We said this morning's video, I'd like to see us take out the yearly low, take out the overnight yearly low, and see what we get below it. SPY did that. ES did not. ES missed its overnight yearly low and still hasn't gotten it. But regardless, after they did that, once we got above A, things started to change. And we told the room, look, this market is incredibly short. So with the news coming out tomorrow with the PPI and then with the Fed minutes tomorrow, CPI on Thursday, if they get any sense that the market might try to come back into balance, these shorts are going to panic. And they did that, D through G. They definitely did that. We were holding single prints. We actually got value from lower to unchanged, lower to overlapping lower to unchanged. It barely closed unchanged. If I was to put this in ones, we're barely overlapping yesterday's. But then the market, again, we told the room, we know this is short covering. It is clear as day short covering. That's all it is with momentum buying. The majority of the shorts are still comfortable. If we can't take out yesterday's high or at least come into balance on the daily, that's telling you that the majority of shorts are comfortable. So when the weak shorts decide to step away, there's no floor underneath. And that's basically what happened. H, I, and J started going down, but they didn't get much. And in fact, I thought, well, maybe, just maybe, that's all they want to do, and maybe more shorts will get run out. But then K came along, took out J, and boom, wiped out. There was no floor underneath. The buyers got crushed. Shorts jumped in again. They actually made a new low on the day, barely, in ES and SPY, only to get ripped apart when, L came back up and M stopped the one-time framing. Qs did the same as us as we take out both sides of the IB. Russell did not take out the IB low. They had a chance for an outside day up or an outside day down. They end with neither. All we have to lean on today is the day's high and low. I won't count the 7 wide POC. So basically that's it. High and low for the day. Had a good day. I shorted A period in the morning when we got below the opening, then we attempted to get back to it. That turned out to be a nice trade. I shorted B 3 times on the ebb and flow trade. We had lower value. We were one-time framing down. We were below the opening. It worked. That trade got stopped when C took out B's high. And then I actually flipped. I took D, along in D to pop the top, which worked very nicely. I was long in E because we had trend day and single prints. I was long in G because we still had the single prints below us. Now in H period, when H got back up at one point to eyes high from yes, I actually took a short. I'm like, there's no tempo here. And boy, it just flushed down real quick for me. Made a quick 4 points in a heartbeat. Then I did it again, and believe it or not, I did another one in H. It took out G's low. Came back up, took it, and then it went back up, and I actually took it off. Silly me, took it off for a small loss. So if I held it, it would have made money. And then in K, prior to flushing, it looked like we might want to stop the one-time framing. Boy, did I get fortunate. It was only a one lot. And I made just under 2 points on it. But as soon as I took it off, this is when K literally reversed, came down and flushed. And the reason I'm saying that is, I'm just wondering if that had flushed really hard on me and I got hurt on it, would I have just taken off or would I would have added? That's the danger. I know myself. So thank goodness I had gotten out of it. And then I told the room, I might look at half back and I might look at single prints for a long. But it depends on the tempo and the volume. Well, K came down on pretty good tempo and pretty good volume. So I said, you know what? I am not looking. I'm going to watch it and see what happens. And I'm glad I did. Because I would have gotten hurt. If I had taken along at half back, if I had taken along at the single print fill, if I had taken along at the opening, I would have gotten flushed. So I'm glad I didn't, and I watched the rest of the day. As far as destinations, on the upside, all we have is today's high in SPY, 363.03, and you should have the other ones from the other days that I gave you. For the downside, 355.71. And I gave these yesterday. I'll give them one more time, but this is the last time. 354.87 weekly low, 354.15 weekly low, and 351.26 daily low. For the ES, upside, we have today's high of 53.25. For the downside, we have today's low of 79. Then we have the overnight yearly low. I gave the wrong number yesterday. It's 71.75. I had 51.75. And then we have 48.75 weekly low and 42.25 weekly low. And then on the chart, so I'm going to show you all three of SPYs. Now, because for a reason. Monthly is down to me. Yes, we only stretched last month's low the same the way we just stretched the weekly, but there's a difference. The monthly is one time framing down for 2 months. So I'm calling it down. At the end of this month, if just for argument's sake, we don't make a lower low, well, then I'll reassess. I'll reassess and see if I call the monthly down or balance to down, things of that nature. But for now, it's down. I'm calling the weekly balance because all we did today twice was stretch the balance low. But do you see the difference? We stopped one time framing down last week. So that's why I'm still calling it in balance as opposed to the monthly. So again, I'm calling it balance. We just stretched it. We're going to find out if that's all they want to do when we go reverse back to the upper end of the balance or we go and finally take it out. The daily is clearly down. We came out of an inside day 3 days ago on a gap. The gap is still there, and we're one time framing down. So, real quickly, let's go over what we have in store and what to look for. First and foremost, again, thanks for liking and subscribing to this channel. Now, the market is obviously very short. It is not long in any time frame. Look at the monthly. We're at the lows of the year. Weekly, we're at the lows of the year. Daily, lows of the year. The market is incredibly short. I also know that this has been day traders and algorithmic trading that's been pushing the S&P around. The index as a whole, not individual stocks. Long-term money hasn't been in this market to either sell it or buy it consistently, I think, at all this year. So the bottom line is this. We have a lot of numbers coming out tomorrow, Thursday, and then Friday with bank earnings. There's a lot of gloom and doom out there. A lot, right? Generally, the market doesn't really want to flush. I mean, again, we're down 24%. But generally, the market won't continue to go down with this so much pessimism. Everybody looking for that. Everybody's saying, every Monday, when's the crash? When's the crash? So please, as day traders, it's not as big a deal because we traded what's in front of us on a daily basis. But just looking at the market overall, the market's very short. Any glimmer of news out of these reports that come out over these next 3 days can incite a vicious, vicious short covering rally. Just keep that in mind. And on the flip side, if the doom and gloom is warranted and supported by whatever comes out these next 3 days, then for sure we are going to make lower lows and start putting 3,500 in sight, 3,400. There's obviously a lot of different levels that we'll be looking at on the downside. But please, if you're a day trader, I know it doesn't matter as much, but it's still good to have the bigger picture. And if you're a swing trader, keep in mind, we did just test a weekly balance low. So because of all the doom and gloom out there, I'd be a little hesitant. Look, I go home flat and unbiased. I don't care if tomorrow morning, we open up $20 in SPY or down $20. I don't care. Because I'm trying to be as unbiased as possible. But a lot of traders aren't. And I think a lot of times that gets them into trouble. Anyway, $7 range, almost $100 million on the tape. Wait until these next 3 days. This should be a really, really fun 3 days we have. And I think at the end of Friday, we should have a much, much better idea what the market wants to do for the fourth quarter. Hope you had a good day trading. Enjoy your evening. And we'll speak prior to the opening tomorrow.